Hello everyone. So today we take up with question number 18 of internal reconstruction. Okay. Now what we are doing is just practice. All the concepts are already covered. College examples are already covered. University questions we are just practicing in every lecture. That's it. Points are all covered in the previous lectures. Have a look at it. The following are liabilities and assets of Nervous Limited as on 31st March 2019. 10,000 7% preference shares of 100 each fully paid up 10 lakhs. 2 lakh equity shares of 10 each fully paid up 20 lakhs. 8% debentures of 100 each 10 lakhs. So 10 lakhs divided by 100. You can say 10,000 debentures are there. Then debentures interest due is 40,000. Loan from directors is 22 lakhs. Sundry creditors 10 lakhs in total, 52 lakh 40,000. Asset side we have goodwill, freehold property, leasehold property, plant and machinery, investments, current assets. And this profit and loss in asset side means it's a loss. We have done it earlier also. Now as per 2013 Companies Act, it has to be given in reserves and surplus itself as a negative figure. Before 2013, the loss was shown on the asset side and profit was shown on the liabilities side. So, asset side means it's a loss of 8,50,000. Total 52,40,000. Note, preference dividend is in arrears for past 3 years. That is a contingent liability. Okay, arrears of preference dividend is a contingent liability. Now, as we discussed earlier also that in this chapter, we will not read the adjustments. We will directly read the main question, make the formats, and adjustments we will read and solve it when we solve the question. Okay, so no need to waste time in reading the adjustments. You can just read this sentence. The following scheme of reconstruction has been duly sanctioned by all concerned. This I have told you earlier. Along with the reconstruction, if new company's name is not given, then it is internal reconstruction. Along with the word reconstruction, if new company's name is given, then it is external reconstruction. Here no new company's name is given, means it is internal reconstruction. Now look at the main question asked at the end. You are required to draft necessary journal entries to give effect to the aforesaid scheme. Also prepare capital reduction account, not education account, make it reduction account. And also make balance sheet after reconstruction. So same three things are asked in every question. It's a 15 marks question. So all of you make format of journal entries in the books of Nervous Limited for around 1.5 page. Okay, 1.5 page. Capital reduction account around 8 to 10 lines. You can say remaining half page. Balance sheet formats, etc. we will make later on. So pause the video and make the format of journal entries and capital reduction. 1.5 page and half page. I hope everyone has done the format. Look at it. First adjustment. The preference shares were reduced to equal number. Equal number means earlier we have 10,000 preference shares. So equal number means 10,000 preference shares only. But of fully paid up preference shares of rupees 90 each. Fully paid 90 each. It's not partly paid. This makes difference. If it is partly paid, means they are not changing the face value. Face value they are keeping 100 only. This we had done in the last question. But when they say fully paid up and 90 each, means 90 is the new face value. They are changing the face value. Fully paid up and 90 each means 90 is itself the paid up value and fully paid up value. So that's the new face value. Old face value is 100. So old face value we will debit. New face value we will credit. And 10 rupees what they are sacrificing will be transferred to capital reduction. In the same manner, equity shares were reduced to equal number, again you all can see there are 2 lakh equity shares. So equal number means 2 lakh equity shares of, again, fully paid up equity shares of 2.5 each, means here also they are changing the face value. New face value is 2.5 and old face value is 10 rupees. So here also they are changing the face value. So when face value is changed, old face value we will debit, new face value we will credit, and difference amount we will transfer to capital reduction. First we pass the entry for preference shares. So 7% preference share capital with old face value, that is rupees 100 account debit, and amount will be 10,000 preference shares are there. So 10,000 into 100, 10 lakhs. Now two preference share capital with new face value. So do 7% preference share capital in bracket new face value, that is rupees 90 account, and amount will be 10,000 into 90, that is 9 lakhs. And difference of 10 rupees what they sacrifice will be transferred to capital reduction account. So to capital reduction account, 10,000 into 10 what they sacrifice, that is 1 lakh. Okay, old face value 100 rupees, you debit 10,000 into 100, 10 lakhs. New face value 90 rupees, you credit 10,000 into 99 lakhs. And capital reduction, you transfer difference of 10, that is 1 lakh. Being 10,000 7% preference shares of rupees 100 each reduced to rupees 90 each. I hope everyone is clear with this. Now, same way we will pass the entry for equity shares also, exactly same. There also 10 is the old face value which we have to debit, 2.5 is the new face value which we have to credit, and 7.5 rupees will be transferred to capital reduction. In case of preference shares, 10 rupees will be transferred to capital reduction. From 100 they are reduced to 90. And in case of equity shares, 7.5 rupees will be transferred to capital reduction. So equity share capital with old face value rupees 10 account debit, and amount will be 2 lakh shares into 10, that is 20 lakhs. Okay, 2 lakh shares are already there. So 2 lakh into 10, that is 20 lakhs. To equity share capital with new face value, that is rupees 2.5 account, now same 2 lakh into 2.5, that is 5 lakhs. Okay, and remaining amount 7.5 what they sacrifice will be transferred to capital reduction. So to capital reduction account, $2 lakhs into 7.5, that is 15 lakhs. I hope everyone is clear with this. Here also being 2 lakh equity shares of rupees 10 each reduced to rupees 2.5 each. Now, in both the entries, 2 capital reduction means in capital reduction we will write on credit side, okay, capital reduction account, we will write on credit side by 7% preference share capital, 1 lakh rupees what preference shares are sacrificing, and by equity share capital 15 lakh rupees. Okay, both the opposite accounts will come by 7% preference share capital and by equity share capital account 15 lakhs. I hope everyone is clear with this. So first adjustment is done. Okay, now look at the second adjustment. The debenture holders took over freehold property mortgaged in their favor, which realized rupees 5 lakhs in part satisfaction of their claim. Again, part satisfaction. And 1,20,000 equity shares of rupees 10 each fully paid up. Face value itself you all can see now it is changed to 2.5. So quite obvious 2.5 would be fully paid up. Were issued to them for the remaining claim. Also third adjustment is related to that. The debenture holders waived means sacrificed. Waived means sacrificed. Okay. Waived means sacrificed their interest due on debentures. Now here I have told you earlier the shortcut method, if you remember there are several entries to be passed, but I told you earlier henceforth when we do the further questions will not pass all the entries but follow the shortcut method. What shortcut method? Close debentures account and debit that. Close debenture interest outstanding account and debit that. They have taken freehold property, so close freehold property and credit that. Further we are issuing them equity shares, so equity shares goes out, credit what goes out. Equity share capital you credit with 1,20,000 into 2.5 and remaining amount you transfer to capital reduction. Okay, we have done this earlier also and I made you write it in the concepts that actual entry of debenture holders what we discussed is just a concept. What you will do is close debentures outstanding interest and asset account. Cash received will be debited, but here we have not received any cash. We have issued them equity shares in part settlement, so that point will not come. And profit will be credited to capital reduction. So whatever balancing figure remains will be credited to capital reduction. I'll tell you in advance what would be the amount of capital reduction. See, 3,60,000's property is valued for 5 lakhs. So 1,40,000 is freehold property's value, profit, which will be transferred to capital reduction. Okay, I repeat, 3,60,000's property now valued at 5 lakhs by debenture holders. They realized 5 lakhs for it. So freehold property's profit of 1,40,000 will be transferred to capital reduction. Further, to the debenture holders we have paid 5 lakhs and 1,20,000 into 2.5, 3 lakhs in the form of equity shares. Means 5 lakhs plus 3 lakhs. We are paying them 8 lakhs against 10 lakhs. So 2 lakhs they are sacrificing. That also will go to capital reduction account. Okay. 2 lakhs what debenture holders are sacrificing will also go to capital reduction account. And they have sacrificed entire interest. So interest of 40,000 what they sacrifice will also go to capital reduction account. Means total amount going to capital reduction account will be 3,80,000. but shortcut you will follow. What shortcut? Close debentures account. Okay, close outstanding interest on debentures account. Close freehold property account. Credit equity share capital because we have issued them 1,20,000 equity shares of 2.5 each in part settlement. And then whatever balancing figure remains transferred to capital reduction, you'll automatically find it comes to 3,80,000. So follow this shortcut. Once again I repeat it. Close debentures account, close outstanding interest on debentures account, close freehold property account because they all are settled with each other. Credit equity share capital for issuing to them and balancing figure transferred to capital reduction. Let us do it. First we close 8% debentures, their credit balance of 10 lakhs. To close it we reverse and debit it. So 8% debentures account debit with 10 lakhs. 8% debentures account debit. It is a credit balance. We reverse and debit to close it with 10 lakhs. Then close outstanding interest on debentures. That is also a credit balance. So we reverse and debit it with 40,000. Outstanding interest on debentures account debit 40,000. Okay, outstanding interest on debentures account we will close and debit with 40,000. Then close freehold property. So freehold property is an asset, it's a debit balance. To close it we will reverse and credit it with 3,60,000. To freehold property account 3,60,000. Okay, it's an asset, it's a debit balance. To close it we reverse and credit it with 3,60,000. Then what we are issuing them in part settlement is 1,20,000 equity shares of 2.5 each. So we are giving them equity shares. Equity shares goes out. Credit what goes out to equity share capital account with 1,20,000 into 2.5, that is 3 lakhs. Now whatever balancing figure remains, you transfer to capital reduction account. So to capital reduction account, see 10,40,000 minus 6,60,000. So that will come to 3,80,000. Whatever balancing figure remains, that you transfer to capital reduction account. So 10,40,000 minus 6,60,000, 3,80,000. See, I already gave you the detail of 3,80,000 here. Out of 3,80,000, 1,40,000 is the increase in the value of freehold property. 2 lakhs is sacrificed by debenture holders because against 10 lakhs we are paying them 5 lakhs plus 3 lakhs of 5 lakhs of property plus 3 lakhs of equity shares, 8 lakhs. Against 10 lakhs we are paying them 8 lakhs, so 2 lakhs is what they are sacrificing. An entire interest of 40,000 they are sacrificing. So that explanation I already gave you, but even if you don't do that explanation, whatever balancing figure remains, transfer to capital reduction. Okay, you can rewind and listen to that again if there is any confusion, but this entry of debentures here is very important. Okay, being debenture holders settled, we keep the narrations small and simple. Now to capital reduction means in capital reduction on credit side we'll write all the 3 reasons. By freehold property, as I explained you in the adjustment, by freehold property, okay, because of freehold property capital reduction is getting created with what amount? 360 is property valued for 5 lakhs, so 1,40,000. So by freehold property 1,40,000. Then by debentures account. Now debentures, what they are sacrificed by 8% debentures, to be more precise. By 8% debentures account 2 lakh rupees. Against 10 lakhs we are paying them 8 lakhs. So by 8% debentures account 2 lakhs. And by outstanding interest that they are sacrificing. So by outstanding interest on debentures account 40,000. Now this all comes actually from single entries. If single entries would have been passed, this 3 posting would come. So don't go into the details. I have told you earlier also. Do it with the shortcut and with the logic. In capital reduction, you record 1,40,000 of capital reduction is due to freehold property, 2 lakhs is due to debentures, and 40,000 is due to outstanding interest. Now look at adjustment number 4. The directors converted their loan. What is the loan amount? 2 lakh rupees. Okay. The directors converted their loan, that is of rupees 2 lakhs, into equity shares of rupees 2.5 each fully paid. Means 2 lakhs divided by 2.5. How many equity shares would have been issued to them? 80,000. This is relevant when we make the balance sheet. You must know the number of equity shares. So loan is of 2 lakhs. We are giving them equity shares of 2.5 each fully paid. So how many equity shares would have been given? 2 lakhs divided by 2.5, 80,000. They are not sacrificing anything. Okay, they are just given equity shares, so nothing goes to capital reduction. We are paying them full amount in the form of equity shares. So loan from directors account debit 2 lakhs. Loan from directors account debit 2 lakhs. Okay, to close the loan account we will reverse and debit, or directors are the receiver, debit the receiver. So loan from directors account debit 2 lakhs to equity share capital account. Now what we are issuing them is equity share capital account of 2 lakh rupees. And how come this 2 lakh has arrived? As I said, 2 lakhs divided by 2.5. We are giving them 80,000 shares of rupees 2.5 each. This will help us when we make the balance sheet. So note it down all of you in bracket. 80,000 into 2.5 being 80,000 equity shares of rupees 2.5 each issued against loan from directors. Okay, being 80,000 equity shares of rupees 2.5 each issued against loan from directors. No effect will come in capital reduction account. So 4 entries are done. Now look at the 5th one. The assets were revalued as under plant and machinery 5 lakhs. Now revalued at 5 lakhs and plant and machinery you can see is 11 lakhs. So 6 lakhs we have to utilize from capital reduction to write it off. 11 lakhs valued at 5 lakhs means 6 lakh is to be written off. And investments are 1,20,000 in the balance sheet. Revalued at 1 lakh means 20,000 is to be written off. This what we are writing off we will utilize from capital reduction. So capital reduction account debit, to utilize the capital reduction for writing off various assets. Capital reduction account debit to plant and machinery account with 6 lakh rupees. Okay, what is written off? 6 lakhs. 11 lakhs valued at 5 lakhs means what is written off is 6 lakhs. And to investments account 20,000. So 6,20,000 we will debit to capital reduction account. being assets written off. Now, capital reduction account debit. So in capital reduction account, we will write on debit side to plant and machinery account ₹6 lakhs and to investments account 20,000. I hope everyone is clear with this. Okay. Then after that, so 5 adjustments are done. Now 6.1. The sundry creditors agreed to waive. Now all of you understand what is the meaning of waive? Sacrifice. Okay, waive means sacrifice. 50% of their claim. And waive means they sacrifice 50% of their claim. Let's do this first. That will straight away go to capital reduction. You all can see sundry creditors are 10 lakh rupees. They waive or sacrifice 50%. So that 50% what they sacrifice, that is 5 lakhs. That will straight away go to capital reduction account. Okay, what they sacrifice 5 lakhs will straight away go to capital reduction account. Further, and to accept equity shares of rupees 2.5 each for 50% of their renewed claim in part settlement. Means remaining is not fully settled. What is the remaining amount? Remaining is 5 lakhs. Can I say this 5 lakhs is the renewed claim because 5 lakhs they have already sacrificed. Now again out of this renewed claim of 5 lakhs, they say 50%, they say again out of this renewed claim of 5 lakhs, they say 50% of their renewed claim, they accept equity shares of 2.5 each. So 5 lakhs 50%, that is 2,50,000. For this they accept equity shares of 2.5 each, means you can say 2,50,000 divided by 2.5. They will be taking 1 lakh shares for this. Okay, rupees 2,50,000 divided by 2.5 rupees equity shares means we'll be giving them 1 lakh equity shares for the 50% of the renewed claim. And remaining 50% it is only partly settled. So remaining 50% will continue to appear in the balance sheet in trade payables. They are not settled. Only 50% is settled. Remaining 50%, 2,50,000 will continue to appear in the balance sheet. Look at this entire adjustment once again, and all of you also should do these kind of markings or make workings. The sundry creditors agreed to waive. Waive means sacrifice 50% of their claim. Creditors are 10 lakhs. 50% of that 5 lakhs they sacrifice, waive. That will be directly transferred to capital reduction. Now further they say, and to accept equity shares of 2.5 each, but for 50% of their renewed claim in part settlement. Now remaining amount after they sacrifice 5 lakhs is 5 lakhs, that is the renewed claim. Out of that again, only 50% they accept in part settlement in the form of equity shares. So 2,50,000 they accept in the form of equity shares. They are again 2.5 each, means 2,50,000 divided by 2.5, 1 lakh shares we are giving them. Remaining 50% is only partly settled. So that will continue to appear in the balance sheet in trade payables. It is not settled. Means what entry we will pass for this? Creditors account debit. Okay, creditors account debit to capital reduction as we discussed. 50% they straight away sacrifice, that is transferred to capital reduction account, that is 5 lakh rupees. And Okay, this is 50% what they sacrifice. Directly transferred to capital reduction. And to equity share capital, we are giving them equity share capital in part settlement. So to equity share capital account. And what value of equity share? We are giving them 2,50,000. Only 50% of renewed claim is settled in the form of equity shares. So 2,50,000 is only given to them. And this is 1 lakh equity shares of 2.5 each. Okay, 1 lakh equity shares of 2.5 each. So total settlement done is only 7,50,000, and remaining 2,50,000 will continue to appear in the balance sheet, being creditors partly settled. Being creditors partly settled. Now, to capital reduction. So in capital reduction on credit side by creditors account, what they are sacrificing, 5 lakhs is transferred to capital reduction. So by creditors account, 5 lakhs. I hope everyone is clear with this. You can rewind and listen to that once again. This adjustment was also very important. Debentures and creditors, both adjustments are important in this question. Okay, debentures as well as creditors, both adjustments entries are important. Next, the preference dividend in arrears for 1 year was to be paid. 1 year. Preference dividend are in arrears for 3 years, but only 1 year is paid. So if you remember, we have discussed it earlier also. Whatever preference dividend is paid, entry will be passed only for that. And whatever is sacrificed, 2 years, no entry for that. So 1 year is paid, for that the entry will come. And 2 year is sacrificed, for that there will be no entry. Okay, whatever amount they sacrifice, for that there will be no entry. 1 year only the entry will come. What will be 1 year's dividend? 10 lakhs into 7%, 70,000. Okay, 10 lakhs into 7%, 1 year's amount will be 70,000. Now this was to be paid by issue of 28,000 equity shares of rupees 2.5 each. You can cross check. 28,000 into 2.5 also comes to 70,000. Okay, so to settle this 70,000, we have given 28,000 shares of 2.5. Try it in calculator, every one of you. 28,000 into 2.5 equals to, do you get 70,000 or not? Yes. Fully paid, and the remaining preference dividend in arrears for 2 years is to be waived off. Waived off means sacrificed. For that there will be no entry. As I said to you, whatever amount is paid, only for that the entry will come. Whatever is sacrificed, for that there will be no entry. So the entry for this will be, 2 entries will come. First we will create the liability, because it's a contingent liability so far. So capital reduction account debit to preference dividend account. Okay, first we will create the liability. So capital reduction account debit to preference dividend account. One year's dividend, 10 lakh into 7%, that is 70,000. Being preference dividend payable. Okay, being preference dividend payable for 1 year. Being preference dividend payable for 1 year. And then for its payment also entry will come. So Second entry for its payment will be preference dividend account debit to equity share capital account. What we are giving to them is equity share capital. So preference dividend account debit 70,000. Okay. To close preference dividend, we will reverse and debit that to equity share capital account. Okay, what we are giving them is equity share capital. So to equity share capital account, and we are giving them 28,000 equity shares of rupees 2.5 each. That you must write in brackets so that at the end when we make the balance sheet, we are able to get the number of equity shares in share capital. So 28,000 equity shares of 2.5 each, being equity shares issued against preference dividend. Okay, being equity shares issued against preference dividend. I hope everyone is clear up till here. Now, after that, next adjustment. Okay, this is the last adjustment. Okay, one more is there. All intangible and fictitious assets were written off. Now, which are the intangible and fictitious assets in the balance sheet? You all can see goodwill of 2,50,000 is intangible asset, and fictitious asset means this loss of 8,50,000. So for writing it off again, capital reduction account debit. So all of you write down 9th entry, capital reduction account debit to goodwill account, to write it off to goodwill account 2,50,000 to profit and loss account 8,50,000 Now what we shall do is we'll do this posting and balance amount we will transfer to capital reserve if at all any remaining, and that also will include it in this entry only. So we don't have to pass one more entry for just capital reserve. So first we do the posting of these two amounts to goodwill account 2,50,000 to profit and loss account 8,50,000 and whatever balance remains we transfer to capital reserve if at all any. Okay, so that also we can include in this entry itself. First we do credit side total 15, 16, 17, 19, 24, 24,80,000. All of you do it in calculator and verify that. 24,80,000 credit side total minus 6, 8, 16, 17, 17,20,000 if we subtract. Okay, 17,20,000 if we subtract, then okay, we forgot the entry of capital reduction to preference dividend, 7th adjustment. That will also come over here to preference dividend 70,000. Okay, to preference dividend account 70,000. This entry will also come over here. Now 24,80,000 minus 8, 10, 16, 17, 17, 20, 17, 90. So 6,90,000 amount will remain. All of you do it in calculator. 24,80,000 minus 6 lakhs minus 20,000 minus 2,50,000 minus 8,50,000 minus 70,000. You must get 6,90,000 as the balancing figure that will be transferred to capital reserve account. Okay, whatever balancing figure remains, in bracket balancing figure. So in journal entry we can include this also to capital reserve account 6,90,000. to capital reserve account 6,90,000. And total what amount comes here is in capital reduction account debit 8, 10, 11, 17,90,000 plus 690 means 17,90,000 being goodwill and loss written off. Now the total of journal as a formality is to be done. So 10 plus 20, 30 plus 10, 40, 42, 48, 48, 40, 49, 20, 56, 20, 56, 70, 57, 40, 58, 10, 58, 68, 75, 10, 76 lakhs. All of you verified in calculator? The total must come to 76 lakhs. Okay. So all of you must be clear with this entries and posting in ledger account. Now as usual, all of you pause the video and make the format of balance sheet. Okay. All of you pause the video and make a blank format of balance sheet. In balance sheet heading, don't forget to write what? Balance sheet of Nervous Limited and reduced as on 31/3/90. So all of you make this format of balance sheet and then we make the notes and then do fill in the blanks. Do it fast everyone. Pause the video and make the blank format of balance sheet. Yes, I hope everyone would have done the format of balance sheet. Now let's make the note. Share capital, note number 1, authorized capital. Now authorized capital is not given in the question, so we write question mark and double underline. Then issued, subscribed and paid up capital. Now this is important, okay? Issued, subscribed and paid up capitals calculation and the disclosure also will be important here. See that. Very first of all, in the balance sheet we already have how many equity shares? 2 lakh equity shares. Now which all adjustments do we find equity shares are issued? Several adjustments are there other than first adjustment. Second adjustment, you all can see 1,20,000 equity shares are issued. So 2 lakhs plus 1,20,000 equity shares are issued to debenture holders. Okay. Then further if you see, adjustment 3 done 4. In fourth adjustment also we discussed 2 lakhs divided by 2.5. 80,000 equity shares are issued against the loan of directors. Then fifth adjustment has nothing. Sixth again 2.5 rupees equity shares are issued, means we discussed here in creditors 1 lakh equity shares are issued to the creditors. So further 1 lakh are issued to the creditors. And adjustment number 7, 28,000 equity shares are issued against preference dividend. So now in the balance sheet how many equity shares will come? 2 lakhs, 3 lakhs, 4 lakhs, 425, 5,28,000 equity shares will come. Okay. I repeat it one more time, listen carefully. 1 lakh equity shares, 2 lakh equity shares in the balance sheet plus 1,20,000 equity shares issued to debenture holders plus 80,000 equity shares issued against loan to directors plus 1 lakh equity shares issued to creditors plus 28,000 equity shares issued against preference shares. So 5,28,000 equity shares will come. So all of you write down in the notes 5,28,000 equity shares of rupees 2.5 each. Okay, now the face value is reduced to 2.5. Everywhere you can see we have issued 2.5 shares, and as per the first adjustment the value was reduced to 2.5. So 5,28,000 into 2.5, if you verify the amount, that will come to 13,20,000. Okay. Now, equity shares are done. Preference shares, in balance sheet we have 10,000, quantity is 10,000 only, but from 100 rupees as per the first adjustment, the face value is reduced to 90. So same 10,000 preference shares, but the value is reduced to 90. So 10,000, 7% preference shares of rupees 90 each fully paid up. Okay, or simply 90 each can also be written. 10,000 7% preference shares of rupees 90 each. So 10,000 into 99 lakhs will be the amount of preference share capital. Now disclosure will come off above. All these shares issued for consideration other than cash, as we shown the calculation here, are to be shown in the disclosure. So of about 1,20,000 equity shares are issued to debenture holders. Okay, of about 1,20,000 equity shares are issued to debenture holders then further in that calculation you all can see 80,000 of equity shares we have issued against the loan of directors. So 80,000 equity shares are issued. This disclosure is compulsory. Okay, 80,000 equity shares are issued against loan to directors. Then after 80,000 equity shares, what else do we have? 1 lakh equity shares are issued to creditors and 28,000 against preference dividend. That also will mention here. 1 lakh equity shares are issued to creditors and 28,000 equity shares and 28,000 equity shares are issued against preference dividend. All this will come in the disclosure because all these are issued for consideration against, other than cash. So against preference dividend. Whatever shares are issued for consideration other than cash have to be written in the disclosure. Total will come to 13 plus 9, 22,20,000. Now reserves and surplus, we have only capital reserve, last entry, 6,90,000 of capital reserve. There was a loss in the balance sheet, no other reserve was there. So capital reserve 6,90,000. And same will be the total. Then trade payables, okay, directly because we don't have long-term debt. You all can see long-term debt is there in the balance sheet, long-term borrowing, but debentures are completely settled, so they will not come. Loan is completely settled, so they will not come. So debentures and loan both were long-term borrowings, but since they are completely settled, those long-term borrowings will not come. We don't have other non-current liability, long-term provisions, short-term borrowings. We directly have trade payables, that is creditors. Now creditors we discussed, they are not fully settled. Okay, they are settled with only 7,50,000. So 2,50,000 of creditors will continue to appear in the balance sheet. Total also 2,50,000. All of you can see here in the calculation we have done it. Creditors of 2,50,000 will continue to appear in the balance sheet. Also against 10 lakh of creditors, we have closed and debited them with only 7,50,000. So remaining 2,50,000 will continue to appear in the balance sheet. Then tangible fixed assets, we have freehold property 3,60,000 will not come, it is given to debenture holders. Leasehold property 8,40,000. Okay, leasehold property 8,40,000. Then after leasehold property, we have plant and machinery. Now plant and machinery is 11 lakhs, but we have written off 6 lakhs that we have to show for 5 years compulsory. So plant and equipment, is it plant and machinery or plant and equipment? Plant and machinery. Plant and machinery $11 lakhs minus, we have to show here compulsory for 5 years, written off under the scheme of reconstruction. Okay, minus written off under the scheme of reconstruction 6 lakhs. So outer column only 5 lakhs will come. So 13,40,000 is the value of tangible fixed assets. Okay, total. Then intangible fixed assets, we have goodwill, but that is completely written off 2,50,000. So that also we will show in the balance sheet. For 5 years we have to show all this. So goodwill 2,50,000 minus written off 2,50,000. You have to write minus written off under the scheme of reconstruction. Minus written off under the scheme of reconstruction 2,50,000. So below that it will come as nil. Then non-current investments, directly after intangible fixed assets we have non-current investments. Now investments are 1,20,000 and written off is 20,000. They are now valued at 1 lakh. 20,000 you all can see is written off, okay, for investments. So that also will show in the inner column. For all non-current assets we will show it. So investments 1,20,000 minus written off under the scheme of reconstruction 20,000. So below that 1 lakh will come. Okay, investments will come worth rupees 1 lakh. Then current assets. Now current assets, actually in the balance sheet we have current investment, inventories, trade receivables, cash and cash equivalent, short-term loans and advances and other current assets. But all of you can see we don't have any such information given in the question. In the balance sheet you are simply given current assets of 17,20,000 and that too they are not changing in any of the adjustments. So I am not making the notes of all these items. Okay, directly we make the note of current assets only as 17,20,000, because which current assets are not specified in the balance sheet. So directly current assets 17,20,000. Now we will do fill in the blanks. So all of you write down in the balance sheet format what you have done. Share capital as per note 1 is 22,20,000. Then reserves and surplus as per note 2 is 6,90,000. So 2220 plus 6,90,000 will be 29,10,000. Then long-term borrowings nil, no notes are done. Short-term borrowings we don't have. Trade payables in note 4 we get 2,50,000. Short-term provisions, other current liabilities we don't have, total 2,50,000. Now 29,10,000 plus 2,50,000, so 31,60,000 is the total of liabilities. Now asset side, tangible fixed assets as per note 5 is 13,40,000. Then intangible fixed assets as per, okay, note 4 was tangible fixed assets, is it? So 1, 2, 3, 4. Okay, this must be note 3. Then note 4 tangible fixed assets, then note 5 intangible fixed assets, so intangible fixed assets will be nil because they are completely written off, and then investments are 1 lakh. Okay, so intangible fixed assets nil, then investments 1 lakh. So 13,40,000 plus 1 lakh. Long-term loans and advances and other non-current assets we don't have. 14,40,000. Then current investments we have nothing. Okay, in current assets we directly have 17,20,000 as we discussed earlier also. So directly in current assets we'll write 17,20,000. We don't have other items of current assets given separately. 1440 plus 1720 is again 31,60,000. So balance sheet gets tallied. I hope everyone is clear with this question. Okay. So all of you take care. We'll meet you in the next lecture. Now we'll continue doing the practice of internal reconstruction university paper set until all the questions are solved. Bye everyone. Take care. See you in the next lecture.